Well, good Monday morning. Welcome to Connect, the California MBA's weekly podcast featuring one-on-one interviews with movers and shakers in the mortgage industry. I'm Dustin Hobbs, Communications Director here at the California MBA. And it's February, so we're continuing our discussion and focus on commercial real estate finance issues and guests. And then we've got a great guest this morning, and we want to get into conversation with him here in just a sec. But before we do that, let's thank our sponsors over at Accelerate. So if you're looking to close out more loans in 2021 and getting ready for the inevitable shift over to the purchase-dominated market, then it behooves you to check out Accelerate. And we've been talking about them for a while now, but I really want to encourage everyone listening here to check out and experience Accelerate's award-winning customer engagement platform that features lead management, CRM, call routing, sales enablement, marketing automation, borrower engagement, and data intelligence through an innovative use of multi-channel marketing, which includes text, social media, email, direct mail, phone, ringless voicemail, retargeting, and much more. And as we've talked about on the podcast here, and I think a lot of people who are listening to this know, Josh Friend is the CEO and founder of Accelerate, and we know him really well, and he's a big supporter of the association and very active on LinkedIn. So if you want to connect with Accelerate, connecting with Josh on LinkedIn is a great way to do that. And so if you want to schedule your personal demo today, either connect with Josh on LinkedIn or visit accelerate.com today. So before we jump into the conversation, I want to toss it over to our CEO, Susan Milazzo, for this week's update. Susan?
Thanks, Dustin. Hi, this is Susan with the California MBA. And this week, I'd like to talk with you about the fact that we have all of our 2021 conferences open and ready for business. Our first event will be our Mortgage Innovators Conference happening in a virtual environment, May 4th and 5th. Thank you to Accelerate, being our virtual conference sponsor for that event. And that's, of course, our signature event that highlights technology solutions for every aspect of the life cycle of the loan. So if you're a tech company or interested in technology solutions for your company, that's an event that you certainly don't want to miss. Then late this summer, we will be in person for our Western Secondary Market Conference happening at the beautiful Waldorf Astoria Monarch Beach Resort in Dana Point. Following that, and just a few weeks after, we'll be at our Western States CREF Conference at the Aria in Las Vegas. We're very much looking forward to both of those events and being back in person in 2021. You can visit our events page for sponsorship opportunities for any of those events, and we look forward to seeing you later this year. That's it for this week. Back to you, Dustin.
All right, thanks, Susan. All right, let's jump in the conversation. I'm excited to welcome in Peter Margolin. Peter is the commercial loan originator with Alliant Credit Union. Welcome, Peter.
Cool. Thank you, Dustin. Appreciate the opportunity to speak with you and get you a little up to speed on what our views of the market are and where things are at in the state of the market in early 2021.
Absolutely, absolutely. I see that we talked a little bit before we started here. In California here, it's starting to get a little cloudy in Sacramento today, but it's still pretty warm. I look outside your window and it's a little bit more chilly there in Chicago.
Yes, it most definitely is. It's got a 1.5 feet of snow in my backyard, and the whopping high today is somewhere around 10 to 12 degrees. So good to have a nice warm office to be talking to you in.
David, absolutely. So let's start at the beginning, Larry. Let's find out tell us about your background for those who don't know you and how you got into business and wound up at Alliant.
Sure. By background, I've been actually originating loans for almost 20 years now. Stints at LaSalle Bank, JP Morgan, PennyMac. I did some years at some Fannie Mae shops at both Hunt and Arbor, and then slowly but surely made my way over to Alliant Credit Union for the last 3.5 years. And it's been a great experience so far. It's been a very good lender, and happy to be here.
So did you always know that you wanted to be, it sounds like your background, you've always been sort of on that commercial real estate side. Is that where, you had envisioned your career? Were you always kind of pointed in that direction?
Going back to even college, I was always interested in real estate and ended up getting a master's degree from Wisconsin in their real estate program. And ever since then, I always had an interest, but I've sold property, I've managed property, I rented apartments in Chicago, kind of dabbled, but found the way to numbers and have made a pretty good career out of it so far.
Yeah. Well, let's fast forward here to the present. What's your take on the state of the market right now? I mean, it's certainly one of those those times where there's, to say the least, there's a lot of uncertainty and a lot of things up in the air with new administration now. We're still in the midst of the pandemic and lockdowns in various states and localities. But what's your take on where we're at now?
For us, we never stopped lending with the pandemic. And so for us, it's been a very active year. We ended up at the end of the year having almost $400 million in originations. And, that was a real strong, if not our top year ever. As such, we've gotten a much bigger allocation this year. And I can tell you, January for us has been probably one of the strongest Januaries ever. For me personally, it's been a very, very busy, a busy month, almost month and a half of the start to the year. And we're seeing a lot of opportunities. There are a lot of folks in the market looking for new loans, whether it's been some acquisitions, which are still happening, and a lot of refinances that are out there right now as well. And so we're getting a lot of opportunities. I think the borrowers out there, need to have good expectations. It's not 2008 anymore, but there's definitely a lot of very good opportunities with borrowers, with good expectations, and the mortgage banking community that we work with, bringing in solid opportunities.
Yeah. Well, so, do you think that we're still, in a sense, obviously you guys have had a great year. That's, fantastic news, and always good to hear, always good to hear good news. But obviously the economy is still a little sluggish right now. And overall, from what we understand on the commercial side, we've heard this month from a couple of different guests that, it's with a positive outlook on the market, but there's still, some sectors that are hurting right now. Do you think that we're waiting more on, government action, whether it's the stimulus bill or, reopening of some of these locations, or is it more just a market activity that we're waiting on for something to spur the economy in the sector?
I think it goes by property asset class by class. I'm sure you've heard from a lot of other interviews, retail and hospitality, really tough right now. Those are asset classes that we're just not touching. And I know we've got some other questions down the line, but, those are really tough for us to do. But multifamily, I would tell you most of the deals that we're seeing, we ask about COVID-related issues. And in many cases, they're not having any. Or, folks are using their PPP loans or the stimulus checks to pay their rent. And so the delinquencies have been few and far between, and or, these tenants have caught up on their back rent payments. And though there's good solid cash flow in the multifamily space.
So then, would you say then it's certainly imperative for that to continue for the government to close out the deal, if you will, on this current stimulus bill that's being debated, and get those funds out to borrowers so they can keep making their rent checks?
I would definitely think that would help. I don't think that we are waiting on it per se, and I don't necessarily think a lot of borrowers are counting on it. And frankly, the deals that we're seeing, they're not necessarily counting on it. I think there's more in the retail space, and I've got some friends in the restaurant business that are really relying on those monies to keep the doors open. When it comes to the asset classes that we're really looking at, multifamily, manufactured housing, industrial, and self-storage, there's less of a need for it. But certainly they're definitely going to take them when they have the opportunity to do so. But they're not necessarily relying on that for it. The bigger issue with that is the extension of the lack of evictions and the ability to evict tenants. Most are working with their tenants to make sure that they don't have to evict them. I'm sure many of them are saying, it's better to have an occupied building and an occupied unit than it is to have an empty building where they can't lease it out. And so they're working with their tenants to make sure that there's some cash flow coming in as opposed to none, or waiting on it until time to evict. There will definitely be a wave of evictions that come. I think that's definitely inevitable. But it's not necessarily something we're waiting on in order to continue making loans in the market.
Sure, that makes sense. Well, and you mentioned multifamily. How much longer do you see that positive trend? Obviously, it seems to be the darling of the industry right now. How much longer do you see that trend continuing?
People still need a roof over their heads. And whether they're, what we've actually been seeing in a lot of transactions is you've got a lot of larger units, especially in new construction. You're seeing 1, 2, and 3 bedrooms as opposed to studios. You're seeing a lot of, in the new construction deals, we are seeing larger common areas where people can be spread apart, within their spaces, whether it's a larger exercise room, a larger laundry room, a larger common area or office space. You're definitely seeing more space in units and larger units coming to market right now to accommodate for people wanting more space in light of COVID. But yeah, it's definitely a positive trend when we see a lot of multifamily transactions. We are competing with the agencies on these deals, and there's still a lot of activity in the space, and we're seeing actually a lot of acquisitions in the space.
Interesting. So I'm curious your thoughts on specifically, you mentioned sort of the larger spaces. Is that I mean, obviously that's spurred on by the pandemic. Do you think that's a permanent change, or if let's say everything went back to quote unquote normal here next month, would that sort of those changes to the structures of these spaces, would that continue, or would we go back to sort of a more traditional format?
I would think that it's going to continue. I think that a lot of folks are thinking that this is our new normal, and there will be a lot of folks that continue to work from home. I know from our personal experience, we will continue on working from home over time and have less of a need for office space and more of a need for, remote space. And so the larger spaces, I think, are here to stay.
Yeah, interesting. So let's go from maybe good news to not quite as good news on the retail side. What does that sector look like post-pandemic?
That's still up in the air. I mean, personally, I've been tracking a lot of the retail closures, for our team, and they're still coming. I don't foresee there being, a lot of new retail coming to market, a lot of new stores opening up. There's so many people that are shopping online right now. What we're really tracking is what's the adaptive reuse of these spaces. We even saw a transaction here recently where they took a regional mall and it's now a medical office property. And so what are they doing with these spaces? Are they making them into creative offices? Are they putting in medical? What's going into these spaces? And that trend, I think, is going to continue for the time being. There are some retailers that are still doing very well. And so, that's just a matter of, perspective on, is it a small retailer? Were they part of a leverage buyout where it's just too much leverage for those companies to continue in operations? Those are all kind of things that we're watching in this market. But for the time being, we're not even lending on retail, too much on book right now. And it's just not an asset class that we are particularly excited about.
Sure. And what about, let's switch gears here. What about office space? Do you think that, these large urban office spaces will continue to suffer as you point out, as employees continue to work from home?
I still think that there will be a return to central business district, larger buildings. But again, I think there's going to need to be some adaptive reuse as companies go to a hub and spoke model. The attorneys that we work with right now are going to that model. It's just easier for them to, less of a commute, but they'll still have a space in the downtown area in order to, have meetings, go to court, things like that. So yeah, I think that there's definitely going to be less of a downfall like retail than there will be in the office space, and people will still need a central hub while still allowing for folks to work remotely as well.
Do you think that'll change, or do you think that'll be a different story in some of the more suburban areas, or is that just a sort of an urban and central business district issue?
I think the suburban areas, we talk about this a lot, but I think suburban areas will actually benefit from this hub and spoke model where you have people in remote offices in different areas of metropolitan areas that need a space to go, don't want to work out of home or can't work out of home for whatever reason, and still need an office space to go to. So, there's definitely a need for the space. One specific category that we actually still really like is medical office. Provided that it's near hospital or medical centers in general, there's still very good occupancy in that space, and very good dynamics in that space. That medical office is an area that we are still very interested in lending in.
So I'm curious on that issue specifically with medical office space and healthcare related industry spaces. Do you think that there's a potential for a sort of a bubble at some point? I mean, if all these new spaces open up for testing labs or something like that, at some point when the pandemic wanes, do we see a contraction there, or is that sort of a long-term trend?
I would say there's probably a contraction from the standpoint of who's using, space for that, but I would also imagine a lot of that's occurring in warehouse space where they need a big open area to do testing, where they can put in freezers and other, storage areas where you're not necessarily using that within the office, but they're sending it out to a larger lab in a non-office location. But people will still need to visit their doctor, and people will still continue to need to get checked, whether it's for COVID or any other, medical needs.
Sure, absolutely. So let's switch gears here again. I'm curious. You've been in the industry for a while now. What tips would you say you have? What tips do you have for younger professionals who are recently entered the marketplace? This is something I'm really interested in speaking with folks who've been in the business longer. I mean, I just can't imagine coming into the business in the last couple of years and not really having that book of business built up, and then facing the pandemic and the inability to visit clients in person and stuff like that. So, what tips would you have for a younger professional that's recently entered the market?
Yeah, it's interesting. In attending a lot of my CMBA events and things that I've been to in the past. There was a period of time where it was, guys my age, and there wasn't a lot of youth. And I would tell you, for new people coming into this market, is find a mentor, and ask a lot of questions. Find somebody who you trust that, can help you in the space. Not everybody's going to turn into a loan originator. Some may end up in servicing, some may end up in underwriting. But discover what you want in this business, especially in the finance side, because there are so many avenues, and find a mentor who can teach you and show you the ropes and make introductions. I would also say get involved with, the CMBA and other organizations so that you get exposure to not just, an originator, but to an underwriter, to a servicer, et cetera, and find your path within this space because there's a lot to offer. And I've enjoyed it for 20 years, and I would love to continue to mentor some of our individuals that we have within Alliant and try and get them to figure out their path as well.
Yeah. So I'm just curious, did you have a mentor or a couple of mentors growing up in the industry here that gave you that perspective, or is it a matter of you wished you had mentors and now you're wanting to sort of start that tradition within your own company?
It's been a mix. I mean, I'm very inquisitive, so I just asked a lot of questions. But I would, to plug to Charles Crowitz, who really runs our group right now, in specific to manufactured housing lending. I learned the majority of that business from watching Charles and learning from him, and being taught the ropes on how to be an effective lender in that space. And as such, we're actually, we have a niche in that space and in the RV space as well, and the parks, just from my knowledge that I gained from working with him.
Interesting. All right. So we've got time for just a couple more questions here. I'm curious, sort of just as a random question here, what one thing would you say that as a lender right now, in sort of a unique space there with a credit union, what's one thing that lenders should know that maybe they don't know?
The credit unions are out here lending just like they are. We're a competitive force within the space. We are a creative lender, a little self-fulfilling plug. We're not a programmatic lender, and we are able to structure deals that help fit what a borrower needs, not just trying to fit a deal into a box. And so, there are credit unions out there that are going to be very competitive and offer really good loan opportunities and options for borrowers out there.
Yeah, interesting. All right. Well, I mean, and you make a good case there, and I think that it's important that we've had on here in the last couple of weeks on the commercial side. We've had folks from smaller lenders, mid-sized lenders, large companies, and credit unions as well. We want to make sure we sort of expose the entire sector of the industry right now, because you're right, it's not just one sector that's out there. There's certainly multiple options for deals and for customers. So closing out here, I'm curious your thoughts on how crucial it is. I mean, we've certainly saw in this last year in 2020 the importance of advocacy work on both the residential and the commercial side. There's many challenges both here at the state level and at the federal level. And so from your perspective, someone who's been in the industry for a while, and you kind of mentioned getting involved with trade associations, how important is it to support those advocacy groups like the California MBA, the MBA, and the credit union group?
I think it's essential. I mean, you all perform, functions for us, whether it's hosting events, being political advocates for the industry, et cetera, that we can't all do on our own. And you provide a forum for which we can communicate, meet, learn, and continue to thrive in this business. So I think it is absolutely essential for, the CMBA, the MBA, CUNA, and other organizations to continue to not only exist, but to, support us as well as we support you. Going back to that mentor question and the youth, get involved. It is essential for everybody to get involved with these organizations, become a member, learn, be involved, attend events, and as far as that goes, you'll meet a lot of people, for the mentoring and being the youth in the industry. You're going to meet people through these events and through these organizations, and it's absolutely essential.
Yeah. Well, and to your point about meeting people, we're certainly looking forward to this year. We're planning at this point on our Western States CREF conference, which, Peter, I know you've been to before, going back to an in-person model this year. And so September 8th through the 10th, our Commercial Real Estate Finance Conference, the Western States CREF, will be at the Aria in Las Vegas. So let's all keep our fingers crossed that the vaccination protocols go well this summer, and the state and local restrictions are lifted, and capacity limits are raised for some of these locations, so we're able to have these events in person. Because you're right, so much of the building and networking on the commercial side is in person, and it's very hard to sort of replicate the in-person experience. I would imagine you'd agree.
Yeah, as long as they allow us to travel, I will 100% be there. One of the things that I've always found, frankly, about your conference that's been such a benefit is that with the timing of it, the messaging at your event is, what can we do to finish out the year strong, and what can we do together to finish out the year strong. I've always found that to be one of the best events of the year, and looking forward to being back there again this year.
Yeah, well, hopefully we'll be able to see you in person. We'll be able to shake hands there and reminisce on a couple of crazy years here. So, Peter, thanks again for joining us. I appreciate it, and best of luck there to you guys at Alliant, and hopefully to see you in person later this year.
I look forward to it, and I appreciate the opportunity to get on this call with you. Thank you.
You got it. So, and if you enjoyed the conversation here, make sure and subscribe to our YouTube channel here. You can also find us on SoundCloud, Spotify, and Apple Podcasts. And we'll be back again next Monday for our final commercial real estate finance focused podcast of this month. We're going to have a little mini panel, so make sure and tune in for that episode. It should be an informative one. We've got a couple of great guests lined up, so we'll see you then.